So let's see what's happening here. This is New York, and this is now a solid, look at this. We have an uptrending market for a long time, and boom, we have this massive. I was watching this like a hawk. I was like, man, there is a trade in this, and I'm going to take a trade in this, right? So obviously, if it makes sense, not otherwise. So what am I looking at? If I zoom out, I'm trending upwards. This is the last low that created that high, right? So this is my protected low. Price came in because this is an order block, because price returned and exited from here at speed. There are orders here, and which is confirmed by a strong reaction. Why? So why do price react? Always ask yourself, what is it reacting to? Look to the left. Is there something that price is reacting to on that time frame that makes sense? If price is reacting to somewhere in a long ass candle in the middle of nowhere, it is reacting to something that you cannot identify on that time frame. But I promise you, on a smaller time frame, if you go lower and lower and lower, it is reacting to something logical where there's an order block or a zone that it is reacting from. But you need to make sure that it is reacting from a zone on the time frame that you're in. This is an order block. Price is reacting to it. Fantastic. You had a reaction. The zone did not have enough orders to put a new higher high, and it fell, right? This, again, if I start drawing my zones, extending my zones over here, you can see that is a reaction, but I'm not bothered over here, right? I'm only focusing on this candle, and I'm looking at, okay, where is my zone, my first zone, right? There is a clean pullback over here, and I could have easily drawn my zone like this, right? There is a fair value gap in between, and I am looking at price coming back. This is the high that broke this low, right? Because this high is obviously higher than the previous, the following candle. So you take this high, this is the high, and this candle, you don't look at it, but you look at the low of this candle. This is the fractal low. It broke it, and then it got swept. Once it got swept, I'm looking at this. I'm like, Now I have a giant wick it has reacted from, right? I could have waited to see if I get a strong bearish close. That's it right there. I get a strong bearish close. So I could have waited after liquidity, like exactly like I was telling you. If you want to place your your entry at the liquidity candle, the one that took the liquidity, that's fine. If you want to wait for a reaction, that's fine, right? But I'm looking at where is it reacting from. Now, if price was reacting from this zone here and it did not cross it, I would enter this trade, because this is the area where buyers and sellers are engaged in, and seller took off. But in this case, the zone did not have enough orders left in them, so it got broken. Once the high is broken, I'm not interested in the zone anymore, right? This zone is gone. So I'm thinking, where is it reacting from? So I look to the left. It did fill this fair value gap, but if I extend my zone to the low of this wick, which makes it a buy to sell, I'm okay. So now this looks like something that I would trade day in and day out, and that's why I placed an entry over there. Imagine if this was the trade like this buy to sell had been broken by the wick, and I deleted that zone, and we did not have this wick, right? If we did not have this wick, I would not have had extended to this level, because it is a buy to sell. This wick now, at this point in time, imagine there's no wick here. Now this is a buy to sell, right? But I covered the entire thing because everything else lines up. Look at how beautiful. You have a low that got reaction, that got broken. You have a proper downward trend. You had a solid bearish candle close. And what am I looking at? I'm looking at for the trend to continue. You take that entry, and it does not mean that the very next candle will continue all the way to your take profit. The next candle could just be an inside bar, right? Sometimes, but after I got in, we see that it's a very easy. It did go eventually in my direction, and there was just a lot of confluences and everything that stacked up in my favor that gave me the confidence to take this trade, right? And it went all the way down. There was really nothing after that. Let's look at this long ass candle over here. But again, I'm close to the news, right? 4:30 is when the news was coming in, or was it 4:30? When was it? Let me have a look today. 10 p.m. Yeah, 4:30 was the news coming in, so we had some interesting news come out, and we did not have a trade. So this high had to break this low and had to get swept, but it did get swept without any interaction, right? Now let's say I wanted to play that supply and demand game over here, right? This is how I would have done it. You have this zone, right? Price came into it, reacted to it, and you had this zone here. So okay, let me draw this properly. So you have this zone. Price came in, reacted from it, went down, and then price went up again. So when price went up again, this would be the zone. Sorry, this is the previous zone. This would be the zone that should contain the price. When it failed to contain the price and broke to the top side, I'm not interested in the zone. The zone is done for me, done and dusted. Now the price comes in and takes this high and it's coming back. I'm just waiting. There's no hurry for me to take the trade. It's towards the end. It's at the bottom end of that entire huge leg of 2 hours of trending bearish. Do I want to risk no money? But for the sake of argument, if this was earlier in the day, this price came in and it reacted. Fine. Now it reacted to a point where it took this potential supply out, but it is still contained within the larger supply. Fine. Now the price is coming back. I'm watching this price coming back, but I see that it is reacting and it's pulling away again. So this would be the zone. Now you're making a demand chain. Now if price is going up, right, this low should be strong because you're creating a demand chain, and if there are enough orders in here, it should break to the top side, right? Just like it did over here strongly, it should break to the top side, but it did not, right? So my bet typically when you are doing these buy to sell and sell to buys and demand supply zone battles, you do a confluence check. You see, where is it reacting from? Did it come back and have a reaction back to the top side, right? Which direction are you trying to follow the trend? So my overall bias is bearish, so I'm looking for an excuse to get into a bearish entry. And I'm like looking at this and I'm saying that if the low of this breaks, this zone has been tapped, this zone has been tapped, it has reacted, it is not creating higher highs, right? Closing strongly above. If the low of this rate breaks with momentum, I want to ride this trend, right? Typically what I do is I will do it to the high of the reaction, right? Where it breaks to the high of the reaction, or you could cover the entire zone. That's really up to you. If you cover the entire zone, what are we looking at? We are looking at a 1 hour break-even trade. But more often than not, if this was somewhere up higher, if this trade was somewhere up here in the leg, early in the day of New York Open or 1 hour in, I would be all over that trade, and it would more likely than not reach my take profit. All right. So we had a lot of winners. We had a break-even trade here. We had a 2 hour over here. We had another 2 hour over here. I deleted some of the ones before. So we had a break-even here, 4, 5, 6 hour, and then we had another trade over here, 7, 8 hour. 8 hour, guys, just following 2 hours, looking at candles, looking at entries, simple mechanical setups. You don't need to be a guru. Forget supply and demand, the failed reaction EM3 model. That is advanced, right? You need to really understand what price action is doing in the live markets. It's easier to explain this on a price action that is played out, but in live market, it's hard. In live market, the EMLC, liquidity candle, and liquidity candle and reaction candle, LCRC, are the easiest. Identify a zone in the previous 15-minute candle or the prime candle, let the price play out, let the price mitigate into that zone, let there be strong liquidity taken, enter at the breakout of that liquidity candle or enter at the breakout of the reaction candle. And that's it, folks. All right. So I went over in depth a lot of price action over here because this was the first one and I really wanted to talk through all the setups because of the questions that are coming in. But we will try to keep up with this on a daily basis where I'll be going over trades and talking rather than just posting the markups, something special for the members so they understand where my mind is as I am executing this. All right, folks, you all have a good one. Cheers. Bye.